Dear all, thank you for tuning in to our research webinar in the morning. Have a good Monday. So today will be very light. So we have a actually weekly by our head of research, and then followed by some technical analysis update. So without further ado, I'll pass the time to our head of research, Paul. Thank you.
Yeah, thanks. Just run through a bit light today on content because okay, on just some updates in Singapore, some macro updates in Singapore. I think the big positive we had was the December exports. It was the first year-on-year growth in almost 13 months. But a lot of it was due to a surge in pharmaceutical exports. And electronics still very weak, was still down 21% year-on-year. And the other positive data point we had was property. I think the number of units sold was 538. It's down actually 11%, but on the fourth quarter basis, it's actually up 14%. So I guess this is positive for the at least the real estate agents. I'll show you the charts later. In terms globally, we actually you do see a pickup in exports, even in other countries, and namely like Korea. Although it's still contracting, but it's the weakest contraction in 7 months. And also even in Taiwan, we saw at least the fastest growth in 14 months. So there is some improvement in exports, not only Singapore, but globally. Of course, the headlines has been the trade deal. I guess all we can say is that it's just going to be at least peace for the 1 year, and he's probably and Trump, and obviously he's using the trade deal as a way for his 2020 elections. But the trouble is that the deal is going to double Chinese exports. Actually, there's a lot of details there. They used to China was importing about 170 billion, so they want this to jump by another 200 billion by in 2 years' time. So it's a bit of a stretch, but anyway, I guess it's good enough for the elections. Anyway, in terms of corporate news, I think the big news we had was, of course, Singtel's news. Just to give you some background, of course, on the 4th Jan, Bharti Airtel, which is Singtel's associate, announced a placement of 3 billion. It was all fully taking up shares and convertible bond. Then the bad news came out was that, if you can recall, in October, the Indian authorities impose some dues. They call it dues, but actually it's a fine on all the outstanding royalties actually on all the telcos. So as you can see from the number here, Bharti has to pay 3 billion and Vodafone 4 billion. Initially, this thing was imposed in October, but they were trying to probably defer it or even pay in stages. But the court rejected and asked all parties to pay by 23rd January this amount. So that's why we saw a run up in Bharti because the talk now is that India from 10 operators to 3 operators, mobile operators, to now possibly could even be 2 operators. So the 3 operators right now in India is Bharti, Vodafone, and of course Reliance Jio. So what because Vodafone has said that they may not be able to pay. After all, their market cap is only 2 billion compared to this 4 billion fine, and both parents, because they got 2 major shareholders, have announced that they're actually not willing to support. So there's a possibility that India becomes a duopoly in the mobile market. So any the positive, that's why we saw a big run in Bharti. Of course, it affects us positive for Singtel. Like I mentioned, it could be a duopoly. And secondly, now the capital raising was successful. It wasn't a deep discount, and also there was some positive data from Bharti itself. Although they rarely release data, but it's just some operating stats that shows that their 4G subscribers surged. And of course, the big news for the whole sector was in early December. There was they increased tariffs after really awful price for the last 2-3 years. Tactically, we are positive on the market. I think can add more cyclicality as we see economic data start to improve. A bit more cautious on the Singapore rates. These are some of the key events for next week. I guess not really a lot of stuff. I think the main one is probably some Singapore industrial production and some CPI numbers. And then I just run through some of the sites. You can see this is Singapore's exports. You can see that it's beginning to recover. So it's good for the Singapore economy and also for the cyclical stocks. And of course, it's not unique for Singapore. You can also see this happening in some of the 2 other major, Taiwan and Korea. Oh no, this chart is just to show you, you can call this the SETS chart. The reason why SETS has been weak is because the freight traffic has been continued to weaken, and you can see from here, but of course, passenger is still healthy. Just a quick flash into the construction industry, since it's a hot topic. I can see the construction is still growing about 30%. This is the contracts awarded and also are ready-mix concrete. We can see from here, the last 2-3 years it's been on below zero, it's been contracting the last 2-3 years, and now we're beginning to see a meaningful rebound for the construction industry as illustrated by this chart. And just a quick refresh on the TISO, as you can see that since the price war, when Reliance Jio, the operator came in, there's been a massive price war and it's dropped. Just to give you some perspective, you know, 1 Indian rupee is $71 US. So all these price plans are like $1 to $2 US, I mean, about around $2 kind of price plans in India. So the average user in India pays about $2 US. So the prices collapse, and that's why you can see there's been a lot of difficulty with the losses and so forth. So you can see that the pricing is starting to recover. So that's why they rally. And also the other reason there was positive news is, and this is the party's 4G subscriber base. There was a big pop, 20 million new subscribers in third quarter. This is just to give you some flavor of the new shares, the dilution and so forth. Okay, I'll move on to Viren.
Thank you, Paul. So today I just do a very quick update on my technical pulse update. So let's first start. We'll look at UOB. So UOB, we have a technical buy, but however price has been struggling to break the ascending triangle resistance level. So on the next chart, we will see that there's actually a cluster of three bearish pin bar cluster together highlighted on the chart, and then subsequently it actually formed in the rising wedge formation. So these actually indicate that there's a further correction downside, and also stochastic indicators in an overbought cross, and then through the overbought, I think that there's a very strong downside to the potential buying zone highlighted in the chart. So move on. Let's Capital Land Mall Trust. Actually we predicted that that actually there will be a further downside correction to the next support. However, the upside rally took us by surprise. So look, if you look at the chart, right, there's a bearish flag formation first of all, and then the potential buying zone is near to the bottom at $2.30. However, and also the depth crosses that there is highlighted in the chart strongly supported the bearish course. But however, the bearish flag was invalidated. But however, and there's a strong upside movement. However, but the bullish upside, you can notice the candle is starting to diminish. So we believe that it's either going to reverse at supply zone 1 or supply zone 2, and the potential rebound support is at 2.49 or round up 2.50. And then on the stochastic front, there's a potential overbought crossing soon. So once it actually hit higher and then near the supply zone or at the supply zone, there's a overbought crosses. So then there is a strong signal that the price Capital Land Mall Trust actually will head for reversal. So next one on the UOL group, further bullish upside is still going strong. We published this report on the fact that there's a rising high volume based on the colored bar volume. Buying volume has been greater than 14 periods ago, and then we still stand strong on that. And also the bullish pennant, as you can see highlight from the chart, it actually has broke out of the pennant. So however, do take note that to confirm the renewed bullish action, the immediate resistance is still need to be tested to confirm the bullish sentiment, which the immediate resistance still stands at $8.58. So let's move on to Hong Kong stocks. ICBC has been performing well since the Q4 of last year, and then from the chart, actually when price actually break the $6 mark, psychological resistance mark, and has 2 period above it, there's a long leg doji. No, the long leg doji is actually a signal of a bullish continuation or bullish reversal. However, we also take note that in my report, right, that there's a demand area that's highlighted. So we believe that price may actually have a strong rebound at the demand area. And further note, there's a golden cross highlighted in the chart as well. So but and indeed the next price action suggests that there's a strong bullish rebound near the demand level at 50%. And then next up, we have a new bullish pattern that is forming, and also the bullish pin bar as of last Friday is actually rejecting the 50%, and closing price closing at 38.2%. So there might be a strong bullish renewal upside. So I move on to Johnson & Johnson. Take note that today is a public holiday for the US market, so there won't be any trading. So for Johnson & Johnson, there's a strong bullish flag and a strong bullish pin bar reject the demand area. And then truth be told, yes, the price did have a strong bullish upside, and then it break the key resistance level at 147.84. So in this sense that we still believe there's still further upside to $150 at the resistance. So upon reaching $150 and 151.22, we believe that that there might be a slight correction back to the key support at 147.84. So American Airlines, although in my report there's a strong bullish conviction, but we find that after some periods of the candles revealing itself, the bullish strength is actually lacking. So first up, pardon me for the title, I didn't change it. So bullish engulfing at 88.6 is at the bottom of the ascending triangle or ascending channel. Potential double bottom is still running. But however, you look at the new chart, that actually the long leg doji at the gap zone is actually very strong. So it signals a very strong possible downside reversal. And because of that, the future price movement, it actually formed a potential bearish flag. You can see that I highlighted in the chart. So with that being said, then if price break down two periods of the bearish flag and the long ascending triangle, then we might see that the renewed bearish action correction up to $24. And on the higher time frame, you can actually interpret the ascending triangle as a bearish flag on a high time frame, maybe in the weekly chart. So therefore, we believe that American Airlines, the upside is not very strong. So for the US market, the Dow Jones Industrial Average, the 30,000 target is actually what a lot of analysts think that it may reach. And while Dow Jones has break the 29,000 barrel, and now it's at closing at 29,300 plus level. So we believe that the 30,000 is somewhat closer now. After the 29,000 level is broken, the bullish trend is continuing. Let's recap for the whole of 2019. We have been sharing that the Dow Jones Industrial Average is in a five-wave expanding triangle. However, the recent price action suggests that especially after it break 28,000 level, it has invalidated a whole triangle correction. And then we take a step back, and then we analyze using the wave theory. So we believe that that it may be a expanded flat corrective wave, but when price actually break the 123.6%, which is at 27,763 level, that the whole expanded flat corrective wave is already invalidated. So with that being said, we believe that there will be a start of impulse wave rather than corrective wave from 22,000 all the way to 30,000. So if you look at the Fibonacci extension level, of the whole wave A, we believe that price has still a little upside to 29,652.84, and then maybe it will just close near to 30,000. But however, do take note that due to the limited liquidity in the US public holiday, there might be a sell-off. So just trade with caution. And lastly, I will end off my presentation. So if there's any question, please type in the comments on the chat box. Thank you. For Sheng Siong technical buy, we still holding on. Currently, there's no new renewed signal. So if there is a renewed signal, I will just put it on our webinar. I'll update on our next webinar sharing. Thank you. For SDI, currently is at a resistance level. It have a slight has a bearish hangman at 3,284. So I believe that there will be a slight bearish correction as is near to a resistance. So do take note that for the SDI on the daily chart is actually showing some rejection over at the resistance level of 3284. So we believe that this might be a potential double top. So just trade with caution. Thank you.
Yeah. Sorry. Okay, just to okay, on our view on SG REITs, ours are tactical views. So we just think that if we just it's more a macro view because we think that as the global economy kind of improves, we think there's upside pressure on interest rates. And as you know, last year the whole rally was purely due to a fall in interest rates. So that's why we think that the upside for REITs is probably just coupon clipping. I mean, just getting your dividends. They're a bit more worried on the capital appreciation for REITs because the underlying operationally, most of these REITs are growing low single digit kind of a DPU organically. So without a big headwind in interest rates falling down, we just don't think that there'll be the appreciation after last year's 20+% kind of return. We are just more cautious on the upside for this. Yeah, that's how it's mainly a macro view, and then on the ground, I don't think organically they're growing like that strongly. Probably low single digits. So that's why we're a bit more cautious technically.
Hi, sorry, we do not have any current view of the China stock and the Shanghai airport, and also we do not have any views on China South at the moment yet. But thank you for your question. So for China South, I'll do a detailed analysis and then I'll update on our stock BNB. Thank you. So for DBS, we share the same view with UOB. So there will be I think there will be a slight bearish correction, but do take note that there might be a strong rebound thereafter. Thank you. For Hang Seng Index, there's a based on my chart that on the live chart that I'm seeing now, there seems to be a sell-off at the resistance level of 29162, and then today now is at trading at below 291. So if this bearish candle continue and cover the whole hanging band, we believe that there might be a further correction thereafter. Also, if you look at the chart from the low to the high on 4 December 19 to let me see 9 January, and then we connect the high and the top, we actually can see there's a rising wedge on top of the ascending triangle, ascending channel that we'll be seeing. So key resistance level to confirm the bearish will be 2852.3. I hope that answers your question. Thank you very much. The US tech stock has been performing well as of last year and until this year, but we believe that you do have to trade with caution because Facebook and all those like Google's are all-time high. So just take note of any correction, especially now is at Martin Luther King's day. So there will be a short of liquidity there. So there might be a correction. Thank you. I hope that answers your question. Thank you. There's a question on Bread Talk also. So we did not cover Bread Talk recently. So and nonetheless not on the chart as well, on our slides as well. So unfortunately we do not have any views on Bread Talk now. Thank you. There's a question on Alibaba Hong Kong and Alibaba US. So in comparison, you need to check the market cap, which one is higher, and the market volume. And unfortunately, we did not cover Alibaba this time around, so we do not have a data at the moment. But however, you can use our poems, log into poems, and then use stock analytics to actually find out the basic fundamentals of both Hong Kong and US. Thank you. Sorry, there's a question on Capital Corp. So that actually from the technical, I can always answer on the technical view. So on the technical front, there's a huge gap up in October last year, and then price are actually kept. The highest price is 6.9, 2 cents shy of the $7 psychological mark, and therefore there's also a bit of range bound between $6.98 to $6.65. So we believe that the volume is thinning, and then even though there's a divergence, there's a overbought by stochastic on 5th December 19. But however, the buying volume, the buying pressure is not very strong. And there's a multiple clusters of dojis and hanging man at near 6.87 to 6.79. So in this this retrospect, we believe that the Capital Corp will actually have a further downside correction at least to 640 before a rebound. And we believe that the rebound will not be that great. Maybe you'll be back to 6.90 again. So in the whole retrospect, we believe that Capital Corp will have a least possibility to pass by $7. I hope that answers your question. Thank you. Dear all, if there's no further question, we'd like to end this webinar. Please note that the next week we don't have any webinar as this Chinese New Year, and our webinar instead of once a week will be running bi-weekly. So please do take note of our website Stock BNB for the upcoming webinar dates. So I wish you all a happy Chinese New Year and happy holiday. Thank you.